Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hey, and welcome to BankTalk. I'm Jordan Kelly, your host and consultant at Remedy Consulting. Today, we're sitting down with Megan Pannier from Fiserv. Her team recently ran a study looking into the value of digital users to the bank, and we wanted to invite her in to talk about what that study revealed. So without further ado, let's dive into our discussion with Megan. Welcome back to Bank Talk. We are sitting today with Megan Pannier from Fiserv. Megan, thank you so much for being on our podcast today. I know that you've been doing some really interesting things in the space of digital offerings, meeting those consumer needs. And recently, you worked with Northwest Bank. Love to have you on today. So grateful to be able to sit down with you. Do you want to go ahead and give us a little bit of background about yourself before we talk about this study?
Yeah, you bet. Thank you, Jordan. Excited to be here today to talk about our work with Northwest. So, as you noted, I'm Megan Pannier, and I lead adoption marketing at Fiserv. And so really work with all our bank and credit union partners to help them increase awareness of digital solutions and increase that adoption and utilization. So I've been working with financial institutions at Fiserv for the last decade, both focused on consumer and small business adoption of online and mobile and payments. And before Fiserv, I spent 15 years at Zions Bank, where I oversaw digital marketing and analytics. So I'm very passionate about banking and look forward to talking about some of our work today.
Well, we're very happy to have you. And quite frankly, based on both what you focus on today and, where your past has brought you, I think you're perfect for kind of this in-depth discussion, not only about the specific study that you worked on with Northwest, but this higher level topic of digital in banking and particularly digital engagement among banking consumers and banking customers. The reason being that, for our listeners, this is such a hot topic and can't imagine it's going to be slowing down anytime soon. So, diving into this study that you conducted with Northwest, financial institutions, banks, credit unions, the entire spectrum, everybody is making very significant investment into their digital offerings. They're taking really close looks at what those digital offerings are and how they can meet consumer needs and expectations. There's a huge push to increase usage of digital channels. Again, it's definitely ongoing, but one of the things that is certainly a reoccurring point of conversation is that banks struggle to find a clear understanding of the return on that investment into those digital channels. What return are they seeing on investment in digital and what does it bring to the bottom line of their bank? So really, how is Fiserv helping to answer this reoccurring question?
Yeah, it is a big one. And, it's not as cut and dry as the revenue that banks get from more of the core generating services like loans and cards and whatnot. And so, we really are looking at, since there's not that direct revenue that they see from those other types of products, like what is the value that digital customers bring? And there is an assumption that's been out there that digital customers are more valuable to banks and credit unions than non-digital customers. And we really wanted to prove that hypothesis. So over the past few years, we've conducted what we call the digital engagement study. And we've done a few of these studies in partnership with some of our bank and credit union clients. And the most recent study, and what we're here to talk about today, is the one that we completed in partnership with Northwest Bank. So in addition to, looking at digital versus non-digital and what impact that has, we also took a look at, how the customer value increases even further between highly engaged and lightly engaged digital users. So, the highly engaged digital customers, we found, are logging in on average about 38 times per month, where the lightly engaged are only averaging about 9 digital logins per month. So definitely a pretty big gap there. And we really wanted to say, okay, the more not only getting them to adopt online and mobile channels, but also getting them to increase the usage of those channels. What does that value look like, and does that bring more value incrementally?
And it's such an interesting question to, try to tackle. And as you mentioned, certainly not an easy one to wrap your hands around.
Mm-hmm.
But so tell me a little bit more about about the digital engagement study that you did with Northwest specifically. What was the purpose of the study? How was it conducted?
Yeah, so Northwest has been a great partner of ours. So we were really excited when they expressed interest in doing a study. And the leaders at Northwest, wanted to know which of their customers use the bank's digital products and which products they use most, and how those products affected the relationship that they had with Northwest in terms of increased profit, reduced expenses, and relationship primacy. So we launched a multi-part study with them using a combination of data that we have here at Fiserv and then pretty granular Northwest customer data. And we use that to identify digitally active customers, measure their digital engagement, and quantify the value of their financial behaviors. So it was also unique with Northwest, where in our previous studies, we had only focused on retail customers, but Northwest, wanted to incorporate their small business customers as well. So that enabled us to really analyze the impact of both retail and business customers that were using those online and mobile channels, and kind of look at the differences between, retail and business.
Looking back on the study,
Mhm.
how big would you say the sample size ended up being, both between the retail segment and those small business customers?
We had a data set of about 360,000 retail customers and about 21,000 business customers. And we segmented those customers based on similar financial behavior and characteristics. And that really helped to provide insights into the study population. Then we quantified the impact of digital engagement on key metrics, both at a point in time and then looking at growth over time. So for the point in time study, we do a recency, frequency, and monetary, or RFM analysis for short. And in that analysis, we focus on customer activity from the most current 6 months of data. And then we create a score for each customer that was active in at least one digital product during the analysis period, which is really how we define a digital customer. And then that RFM score is used to categorize customers that were digitally active as low, medium, or high engagement. And those financial behaviors were measured for the digital versus non-digital, as well as the differing levels of engagement. And, a unique thing about this study as well, as we take it a step further. So once that RFM, or point in time analysis, is complete, we move into what we call a longitudinal analysis. And that really looks at changes in behavior and measures growth over time, so that you can actually see the cause and effect of a base of like customers who all joined the bank around the same time, and what happened with those customers that went digital versus those customers that remained non-digital, and how that level of digital engagement affected growth.
We'll be right back.
Are you navigating the complex world of technology vendors? Then consider giving Remedy Consulting a call. At Remedy, we're committed to maximizing your technology investments. Whether you're contemplating a switch of a major tech vendor or renewing a contract, our experienced team can add significant value. With backgrounds in major vendors, we ask the right questions to eliminate headaches and unnecessary expenses for our clients. Whether it's an immediate cost relief in your invoices or a strategic contract protection for the future, we've got you covered. Our experts specialize in core, digital, and more. So whether you're renewing your technology contract or need an outside opinion or a project manager, visit remedyconsult.net. Thank you for tuning in to the BankTalk podcast. Now, let's dive back into the episode.
Fantastic. I mean, there just were so many aspects that were kind of accounted for, especially in this area of in the digital world and looking at digital banking customers. There are so many different, potential influences on those customers and on their activity and behavior over time. So tell me a little bit about the findings. What were some of the biggest takeaways that the study revealed?
Yeah, so about 52% of their retail customers are digitally active. That's pretty consistent with what we've seen in other studies as well. But they have about 60% of their customers that are under 45. So definitely skewing younger. You hear, a lot of financial institutions talk about how they have an aging base, but this is, the opposite of that, where have been successful at appealing to that younger demographic, which is, obviously a really key target audience for community banks and credit unions. And so the study results were really interesting and, really proved that hypothesis that digital engagement really does add value to the financial institution, and that there's a really strong correlation between digitally active customers and net profit, balance growth, and transaction activity. We found that overall the net profit growth was 43% for digital retail customers, where it was only 5% for non-digital customers. Pretty significant in terms of the profit that those digital customers are bringing to the institution, where the non-digital remain pretty stagnant. And also those digital retail customers had 10% more product growth, 11% higher loan balance growth, and 37% more ACH activity. So that really lends itself as well to primacy. The more that they're making, having incoming ACH as well as outgoing ACH, really lends itself to that likely being the customer's primary financial institution. And looking at kind of some expense drivers as well, they also visited the branch 43% less than non-digital. So, definitely some potential overhead savings with some of the branches. When you're moving them to digital, they still do have a need for a branch, but we're coming in much less frequently.
Absolutely. That's so interesting. Still kind of focused on these retail customers, but can you tell me a little bit about what you saw as the study progressed over time, particularly on the behavior side of things, maybe as it relates to the various levels of engagement? You had mentioned that as the study started, you were kind of able to classify these customers into low, medium, and high engagements. Did you have any findings related to those engagement levels?
Yeah, we did. So at the beginning of the study, we were looking at point in time. And so the highly engaged digital users, about 34%, where moderately engaged 27%, and then lightly engaged was 39%. So you definitely want to move folks from that lightly engaged segment into the moderate and highly engaged. And as we started to look at in the analysis over a 12-month period, there was that shift. So at the end of the study, we found that there were 23% that were considered lightly engaged of that base, 32% moderately, and it jumped from 34% to 45% for highly engaged. So definitely some great movement just in the study window.
And so, of course, we've been talking strictly to some of the results that you saw on the
Mm-hmm.
retail side of things. But as you mentioned, the small business or, Northwest also wanted to include their small business customers in this study.
Yeah.
We know that small business group, this is a group that many community banks are looking to deepen that relationship with.
Mm-hmm.
So what are some of the things that you learned about small business customers from a, value and loyalty perspective?
So really interesting findings for the business. And like you said, it's such a key focus for, banks and credit unions, and it's becoming more and more so. I think there wasn't enough done on the small business space for a while and making sure their needs were met. So it's really exciting to see, the focus that everybody has on business right now. And so what we saw for these customers was your digital frequency was a little bit different than retail, where they actually had 59%, which were lightly engaged, and 16% moderately, and 25% highly engaged. So definitely a lot of opportunity to get those businesses more engaged with digital services. And so we found that, like retail, those businesses that are using digital did deliver more value to the bank. Their ACH credit usage was 4 times higher than non-digital business customers. They also had 19% higher deposit balances than non-digital customers. And that's meaningful in the small business space, where deposit balances are higher in business accounts than they are in retail accounts. And so having a 19% differential there is pretty significant. And the digital business customers delivered about 13% more in net profit to the bank. And also kind of another expense play, like, the in-branch activity, the business group issued 20% fewer checks than non-digital. So checks can be costly to financial institutions. So migrating them from checks over to digital payment methods also very meaningful.
Absolutely. It is interesting to hear it from the small business perspective, strictly because, as you mentioned earlier, in my experience, there hasn't been a lot of dedicated studies in this area.
Mm-hmm.
So much of it tends to be focused on the retail side of things, which
Yes.
often have higher volumes, strictly from a transaction volume standpoint. But when it comes to what's going to potentially drive the bottom line for a bank, the business side really is an area that could use more focus. Absolutely.
Yes, definitely. And one of the interesting things that came out of the business analysis was that 38% of the customers who are digitally engaged are only using the mobile banking channel. Of those digitally engaged business customers, almost 40% just doing mobile only. So I think that also is important for banks and credit unions to think about when they're, looking at their digital experiences and making sure that they have, parity with mobile that they do on online, because more and more we're seeing that transition of folks just wanting to only use mobile versus desktop.
And you know what? That leads me a little bit into my next question, because you alluded to it a little bit. A lot of community banks are interested in how their digital banking offering compares to that of their peers and
Mhm.
or that of some of the larger top national banks. Were you able to analyze that at all in the study with Northwest?
We actually were. And again, another unique study element for Northwest that we hadn't done before. But they exactly wanted to answer that question and know how their digital offerings stacked up in the market. And so we partner quite frequently with Javelin Strategy and Research. And so we engaged them on this to assess Northwest digital products and their experiences. And so Javelin created a scorecard to measure 6 aspects of their mobile and online experience. So they looked at ease of use, security, financial fitness, and then customer service and account opening. And among the cohort of Northwest peer banks, they ranked first in 3 mobile categories against all their peers. So ease of use, money movement, and financial fitness. And then its online account opening experience also earned a top rank. And so that was exciting for us to see. Northwest, is on Fiserv's Experience Digital platform. They were really interested to kind of see how they were stacking up with their peers. But Javelin also took it a step further and looked at Northwest against the top 20 financial institutions in the country in terms of asset size. And overall, Northwest performed in the top 60% in a playing field of, those largest banks in the country. So it was pretty impressive just with the move to digital, and with a lot of those large financial institutions, there's a perception that they're more savvy when it comes to digital. But, with Northwest stacking up in top spots against their peers and then very competitive with the top 20 financial institutions, just really goes to show that anyone can compete in the space if they have the right digital offerings.
Absolutely. And with the broader takeaways of this study showing the importance of that digital offering to both the usability, functionality, the customer centric side of the business, but also to the bottom line of the bank. I think it really speaks to the importance of that focus that is happening on that channel.
Yep, absolutely.
So, is there anything else compelling in this study that you'd like to share with our listeners, or particularly any other trends you're continuing to see, things you're watching in the industry?
Yes, I think one of the interesting things that we're finding, because we do a lot of, other research, consumer research, business research, and a lot of times customers don't even realize all of the great digital offerings across, online, mobile payments that the financial institution offers. And where bill pay was looked at as table stakes for a while, you have all of, Gen Z and the younger generations who aren't aware of what FI bill pay even is. So I think we got into a habit of thinking everyone's familiar with, these more tried and true banking solutions, even in the digital space, where you just have a whole kind of new base of consumers, businesses that are coming into the financial institution that really need to be educated. And, we find that associate education is also extremely important. If frontline associates aren't comfortable with your digital offerings, they're not going to do a great job talking to customers about that, and may even shy away from letting them know that they can do certain things digitally. So making sure that, you have a really educated frontline staff who's comfortable with the solutions is great. And also, onboarding is so key. As you're onboarding new customers to the bank or credit union, making sure you have, a solid onboarding program where digital is prevalent and really gets them engaged right off the bat. I find that on the payment side, somebody who say makes a bill pay transaction in the first 30 days or a Zelle transaction in the first 30 days, are 3 times more likely to be using that product still 6 months later. So it's really important to get customers aware and using your digital and payments offerings as soon as possible. It really helps create that relationship primacy. And then just making sure you have ongoing awareness that you're doing. It's not just a one and done, that you're talking about a use case for different demographics and how it may differ a bill pay use case for Gen Z versus a Gen X or Boomer. And so just looking for those opportunities to keep messaging your customers to help them get not only to adopt, but move up from lightly to highly engaged.
I find it interesting that I do feel that the onus has really been put on the banks, the financial institutions themselves to ensure that this type of financial education is happening for their customers rather than having the expectation set that their customers are going to come in knowing that these products are both available and what they do, how they can, kind of improve the ease of lives for their customers. I would absolutely agree that we're really seeing a shift in that educational onus being put on the financial institutions themselves. Anything else that your team specifically or that Fiserv has coming out that our listeners should be on the lookout for?
I mean, I would just be in agreement with your comments in that financial literacy is very important. And, one of the key drivers that Javelin actually looked at as being important because consumers are really looking for that education from their financial institution based on being experts and also having insights into their financial activities, that they're looking to their bank and credit union for insights and recommendations on how to improve their financial well-being.
Absolutely. Sounds like they're really leaning on those institutions to bring those types of solutions to them as the customer rather than having the customer be responsible for tracking that down or even potentially expanding their horizons when it comes to financial options.
Yep.
Absolutely. Well, Megan, thank you so much for joining us today on Bank Talk. I think that this was a fantastic conversation, very interesting, and truly the study that you guys conducted with Northwest, I think it answers so many questions that, quite frankly, community financial institutions are constantly asking. So I think it's a very relevant topic.
Thank you so much for having me today. It was great getting to discuss the study and share some of the findings. And folks want more information, we're getting ready to publish a case study on Fiserv.com. So feel free to come out and download that if you'd like a copy for yourself.
Wonderful. Thank you so much, Megan.
Yep. Thank you.
That's it for Bank Talk. Thank you for listening today. Have a good day and keep on learning.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. Megan recently published this on July 18th, 2024, and the article is named, "Are Your Banking Customers Digitally Engaged on Fiserv's Website?" And it is also linked in the show notes below. If you like what you hear, please rate, review, and share our work with others. Thanks again, and we will see you in the next episode.